Good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, February the 10th, 2022. I'm starting here on the 4-hour chart tonight as to show what took place today and the move, as large as it was, how that fits into this larger picture and what my expectations are for this continuation to the downside. First, let me just review this. I'm leaving here at that 16,768 level, the completion point for intermediate 5, primary 5, cycle 5, super cycle wave 3. That's a major top of some very long-term advancing cycles. So where are we? We have just begun to pull back in what will, I believe, ultimately be a much longer term in terms of years versus months or weeks of a corrective move to the downside. Now, that does not suggest that it's going to be straight down all the time, as we've already seen. We have plenty of rallies, all very good, all deceptive, et cetera, et cetera. And if we keep track of where we are, we'll be able to play both sides cleanly and expect, again, resumption of a downside move. So what Elliott's going to help us do is to kind of wrap some parameters around all of this corrective process as it progresses along, so that we can determine, are we going to go through a period of a week or 2 or 3 of rally, or are we going to go in a week or 2 or 3 of basically decline? So what we've done so far, again, basis the 4-hour chart, we have completed the first intermediate wave A, which is the first initial decline. It ended up being an ABC. Now that does pretend to tell us that the market likely this would be the wave B, which should actually have gone a little bit further, because it kind of lets us know that we probably will get a flat type of a correction, but that's not going to be. I believe it is going to be a zigzag. So I may need to recount this particular area, but right now I'm going to leave it as an A and a B. And then what that does now tell us is that we're in the beginning stages of a C wave down, or at least a 5-wave structure down. If it's on an intermediate level, what comes in between are 5 waves of minor degree. Again, we were counting minor degree coming off. Now we're counting minor degree to finish a C wave down. So what we basically just got started with, and now I'll go down to the hourly chart so we can start to see inside of all of this. And go to the hourly. And so we have minor wave 1, minor wave 2. Let's see if I can open this up. Perfect. So we can see that minor wave 1 was a 5-wave structure down. Minor wave 2 was an A, a B, and a C. So 3 waves, 5 waves down, 3 waves up. Now we're beginning the next 5-wave sequence down. It was off to a very bizarre but interesting start. And what took place was that the market rallied up, got to 15,068, and then started to decline, but yet got back up to 15,052 this morning during the Globex session, which left open the possibility that they were going to blow the doors off with these CPI numbers and the jobless claims, making the market return to a bullish picture, giving us the opportunity to possibly see a move from 15,000, where we ended at 52 or even 68, up towards 15,090, up towards 15,150, et cetera, but getting above this high here at this level. Now, that did not occur. So what happened is those numbers came out. It revealed that inflation has actually increased to a 40-year high that we've not seen in the last 40 years, and it comes in at 7.5%. So coming in, we already knew it was at 7, so it's gone up yet again. And that's really kind of stirred the pot amongst the Fed governors. So yesterday we got a report, or one Fed governor making a comment that he didn't see any compelling reason for a 50 basis point hike in March. Today, we got a word from Fed Governor Bullard, who is the Fed governor in St. Louis, that he feels it's likely going to be necessary to raise the interest rates a full 100 basis points or a full point at the March meeting. Then late in the day, and this came to me via one of my trading buddies, and he said that the Zero Hedge was running an article that someone was calling for an emergency Fed meeting tomorrow, where they could begin to raise the rates, possibly even tomorrow. Now, I don't know how much I'm going to take that into, but it could put a really negative spin on tomorrow if this ends up being the case. Right now, rumor, but so we'll wait and see. But nonetheless, here's kind of what happened. We start to get a wave one, then a two. And I'm actually going to say one and then two. So minor wave three is going to subdivide into its own 5-wave structure. So if I have to call this one and this two, then here's where we begin the third wave down. First of three, wave two of three, and then that's where we got that additional, gee, I think maybe we should raise it 100 basis points, and boom, 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 boom. It was just sell, sell, sell. Now, this would have to be then 3 of 3, and I don't think it's over. So, but I want to point out a very important point that I continue to stress about moving averages and how I use them when trading. Now, on the hourly chart, I always make a reference, and I'll come back and I'll take a look. And as we were coming in, this is where we all stood. They were all pretty much pointing. We had the hourly, the 50, the 20, the 8, the 4, everything was still lined up to go up. Then we came down, we slid through the 20. Acceleration began. We slid through the 50. Acceleration continued. We got down, we stopped, the acceleration went down, broke the 200, slid quickly, but came back. So that ended that. Market felt bottoms put in. They just continued to rally. We opened and continued to rally all the way up to 15,029. We started to come back off again here. Broke, regained, broke. Started to accelerate, broke, started to accelerate, continued to accelerate, continued, broke the 200, continued to accelerate. And you'll notice that the market now is going to have to struggle just to get back to that 200. We now have the 20 getting ready to break below the 50. That's going to add another layer of negative to the market on an hourly chart. And then the 50 should start to break. When the 20 comes down and breaks below, or the 8 breaks below the 200, it adds another layer of negativity. When the 20 and the 50 break below the 200, it adds another strong layer to the negativity that the market will be demonstrating, will be showing us. So that will push and continue downside moves. It's a technical factor, but it is very usable. We don't, if you're a technical trader, you want to see that. You want to know this because you're trading off of your own signals provided by the moving averages. Let the market determine as to why it's going to slide. You're just knowing that once it's done, it's presented a negative factor to the market and to traders, and it should support itself by producing an accelerated move to the direction that the market is going. Now, what can I expect for tomorrow, or what can we expect for tomorrow? As I showed on the 4-hour chart, this is just the baby beginning. In fact, I don't even know if I'm going to call these minute. This might be all sub. And if that's the case, then it's going to be interesting as to where actually 1 and 2 and the rest of it fall in. So I need more trading, more data from the markets to chart so that I can determine where we are within this process of a minor third wave down. But I do suspect that we will continue to fall because you can see we're still at higher support levels, higher in terms of this is where, you know, wave 3 would be 3.382 of wave 1. That's just not, you know, not going to happen. It'll find support there. It'll bounce off it, as we saw. It bounced 3 times off of it. came back and then bounced through it. But, basically 4 times. It rallied, came back, and then fell through finally. So they'll continue to function as support. We came down to the 50% level at 46.19, and the market bounced very nicely right off of that level. I would continue to expect that. As you're trading, these are going to provide good bounces and good places to actually trade. Now, but I would suspect as we continue that the market will come down, break 14,513, 14,435, 326. And this is where, again, for the third wave would be equal in length to the first wave at 14,170, 71-ish. Now, yes, that's an acceptable measurement. It's an acceptable Fibonacci level, but bear in mind, what did Elliott tell us? Elliott continues to tell us that within a 5-wave sequence and between waves 1, 3, and 5, the third wave is most often the longest and the strongest. Well, this wave is going down, so it should be the longest and the strongest in terms of how deep it will push. Well, that would make me believe that in and on an Elliott basis, I would be expecting it to drive lower than 100% and more likely to 1.618, which is down here at 13,616. Now, that's not an uncommon Fibonacci relationship between first waves and third waves. That's why I highlight it, and that's why I look at that and point that to a likely target for minor wave 3. Then we have a minor 4 and then a minor 5th wave. And then we'd be looking for those numbers that are down around the 12,000 level. And that may just finish the first ABC down. Again, when we get there, I'll be able to take a look at the entire structure, see what's going on, see what it is, and then make a determination from there. But right now, we deal with what's directly in front of us. And that suggests that we should see continued downside. Now, tomorrow, it's a weekly expiration. We are flying through not only index-wise, but a lot of these component companies, we are flying through strike prices as these companies, like the larger ones, Amazon, Google, Facebook, Microsoft, Netflix, NVIDIA, et cetera, Tesla, they begin to decline, their strike prices all the way down. And if traders are trying to wrap themselves around is like where this is all going to expire, volatility comes into play, and you're going to see a lot of trading going on tomorrow. And there'll be adjustments to be made as things flip and fly through strike prices. And that goes both directions. So upside and downside. Now, that could produce some very volatile two-way trade for us in the NASDAQ. So I'm actually looking forward to it. Now, again, we still are now digesting the additional news from the Fed Governor Bullard, who was talking about a full point rise in the Fed rate in the March meeting. That now takes us up 3/4 of a point above what the market truly was trying to factor in. I don't believe that they factored in the 50 basis point hike that was mentioned that, wow, gee, we don't see a compelling reason. So we can pretty much factor that they truly haven't factored in a 1 point rise in the rates in March. Now, what does become clear is that inflation, as we've been discussing, inflation is real. We're consumers. We're all the same, middle of the road Joe here. We're the ones that got to go to the grocery store. We're still buying gas. We still have to buy maybe a new car. We're still, doing things that suddenly we're realizing it's costing us twice as much as it did. Inflation is real. We're looking to the Fed to put a cap on that. And the only thing that they can do to do it is tighten the money. Less money in our hands, then we can't spend it, and the prices have to come in, and everything starts to fall back into line. Now, It can be a painful situation, but it's one that's how inflation will be put under control, wrapped around, hog-tied, and put back into the cabinet. If they don't, and we continue to see this climb and climb, then you know that the only way that it's going to happen is they continue to choke off the money. So cheap money, not going to happen. Money's going to cost more. Therefore, our borrowing rates are going to go up, et cetera. It's going to affect a lot of different things, the market being one. So once this all starts to get factored in, I would suspect we continue to decline. Overvaluation will be taken care of. For whatever reason that got there, I do suspect that we're going to get lower prices. Initially, I think we'll break here and we'll start to head down to these lower levels. Ultimately, and as a minimum, I believe the market needs to break below 14,363. Wave 3 definitely needs to put a new low in below wave 1. And actually, we can go all the way out because we know we have lows down at 13,706, 806, wherever that low was. That needs to be taken out as well. So over time, we're going to end up all the way back down there. Right now for tomorrow, could be another volatile day. Again, today, we got immediate response to, is it possible for the NASDAQ to drop 400 to 500 points in a day? Yes. It was down over 400 points today, without a doubt. If I had it up here, there it is. It was down 351, but that's recovered into the close. It was down over 400. The Dow was down over 600. The S&P was down just barely 100 points. That can happen in a day. So we can add to this downside by, again, falling tomorrow another 300 or 400 points. And then all of a sudden we're down here. Then that could be a possibility. So to believe that, well, I don't think it can fall. Well, I like to keep all potential and all possibilities on the table, and that be one. What you will pick up the clues that it's going to happen, because moving averages on our shorter time frame, they will be able to point to this using the 1, the 2, and the 5-minute chart. That's going to help you decide direction and depth as this market moves around. It will have strong volatile upside moves as well as downside moves. So just be prepared and maybe like me, be excited for the movement. We should be able to have a really good trading day tomorrow. It isn't always as easy to trade a small account, but everything is possible. They have the mini contract, which is $5 a tick. And believe me, it can go $10, which is $20 a point, very, very quickly. But then there is the micro, which is 50 cents a tick or $2 for that full point. Much easier to trade and to handle the moves. You'll still make your money. Now, I'm going to leave it right there. Trade smart tomorrow. Trade according to what the moving averages are telling you. Look at them. Check in with this daily. In fact, I'll do that before I leave here today. I'm going to take a look at the daily. Let's see what we look like here. Wow. All right. So what we have is that 20 came down, broke the 200. And now it is riding below. This came up, remember yesterday where it was left? Right below that 200. Didn't do it. It started to climb, broke the 20, went and accelerated to the downside. Broke the 4 and the 8, continued the acceleration. We got the 50. It's got to get down below here. And then basically, once the 50 drops below the 200, we will be in alignment on a daily chart for negative action, for a market to move lower. So that's what I'm going to be looking at. When this drops below that 200, I would expect additional fuel to the fire to the downside. All right, I'm leaving it there. The next update will be on Sunday, the 13th.